Mortgage rates are rising and could spike even higher if the U.S. Congress follows through on plans to shut down Fannie Mae and Freddie Mac. They're the government-controlled mortgage guarantee giants that were rescued by a taxpayer bailout during the financial crisis. If they're dissolved, this will have a serious impact on the housing market. In their place, President Barack Obama is pushing for private investors to play a bigger part in the mortgage market. Liling Tang has the story.
Fannie Mae and Freddie Mac. Think of them as the couple you didn't want to invite over for dinner and may soon not have to anymore. Fannie and Freddie are the two government-backed mortgage lenders that taxpayers bailed out 5 years ago to the tune of $187 billion. Both companies have been under government control. But now the government is looking to reduce its role and its risk in the U.S. mortgage financing market.
I agree that Fannie Mae and Freddie Mac have been enormously unpopular programs that maybe have come to the end of their useful life as government-sponsored entities. Maybe if there's going to be a backstop for mortgage lenders, it has to be with private funds.
U.S. President Barack Obama said Tuesday that it is time to wind down Fannie and Freddie, end the days of guaranteed government bailout, and give private investors a bigger role in the mortgage market. While there weren't details on the extent of the wind down or how it will play out, Obama's comments were enough to spur some renewed interest among short-term investors while further vexing long-term shareholders.
The short-term buyers have now started to look at the shares again as potentially attractive investments. The longer-term shareholders are outraged, but they've been outraged for a long time.
That's because under government control, shareholders of Fannie Mae and Freddie Mac were left with very little say. They had no right to profits, they had no vote nor any say in management. Although, to be fair, under conservatorship, management had virtually no say either. And as Congress introduces legislation to wind down both companies over 5 years, some in the market believe this is premature.
I think the only answer is to allow the government to participate in the mortgage market, or to have the government participate in the mortgage market in the best quality loans up to a certain limit. So clearly the government should not be financing mansions. It should not be financing million-dollar loans. It should be financing loans for the middle class, people who work hard, put down a down payment, are prepared to live in their home and build a community.
As for the impact on home buyers, the consensus is that once the government guarantee is taken away or reduced, it will raise the cost of loans as private lenders take on the risk. Liling Tang, CCTV, New York.